Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Monday, June 25th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profits. We expect you to take responsibility for your own trading. That's what education is all about. And it's the application of that education that will determine whether or not at the end of the month your account is up or it is down. Let's take a look at the week that was as we head into the new week. And we see that some of the big news for the week took place right there on Tuesday. FOMC meeting started, and then it was announced at 12:30 on Wednesday that they were going to continue the twist on the market, which basically means that they were going to continue selling short-term bonds, buying longer-term bonds in order to keep the market adrift and afloat, I should say. And so big news out of the FOMC meeting didn't really do all that much to the market on Wednesday. As we see, the market kind of held about the same position it was in Tuesday. Tuesday was the big day in the market when it had its big up day. Thursday morning, we had jobless claims at 8:30. They were basically better than expected, but the disappointment took place with the PMI, and it took place with the Philly Fed. And we saw what happened on Thursday as the market headed down like it was a lead plumb. And now we then saw Friday, and Friday came bouncing back from the second worst decline of the year. In spite of the downgrade of so many banks by Moody's Investor Service, which is one of the main credit rating agencies out there, the banks rose on Friday. How could you figure that would be the case? Largest of the largest banks just did not respond as one might expect with the downgrades. European countries agreed on a $1.3 billion euro package to stimulate growth. However, European shares closed lower on Friday as they did not respond well to that news. So we see that last week there were a lot of announcements that took place, and we'll take a look shortly at the S&P chart and see what effect that had on the S&P as we had kind of a topsy-turvy week. What's coming next week? Well, let's take a look and see what's coming next week as we see that we have new home sales, Dallas Fed Manufacturing Survey, all those on Monday. On Tuesday, same-store sales coming out early on Tuesday morning. Case-Shiller certainly can move the market, consumer confidence there. These are things that absolutely can move the market as we're having some news coming out this coming week, and those news can affect the market. Durable goods orders, pending home sales index on Wednesday, not as big a movers, but here we are on Thursday. GDP, jobless claims, and Kansas City Fed Manufacturing Index, which probably won't move it as much. And then on Friday, Chicago PMI, definitely a mover, and consumer sentiment, all those occurring before the 10 o'clock hours. So there are quite a few announcements this week as we head into the week, and they certainly could lead the market one way or the other based upon the results that we get out of those moves. SPX, we see that the SPX on Friday did bounce back from that big decline which took place on Thursday. And when we look at the overall week, we see that we're down for the week about 0.6%. We talked about that last Monday, how we had an overwhelming number of years where the market headed down the week after June expiration week. We actually said that 20 out of 22 of those weeks in those 22 years were down, and now it's 21 out of 23 as we ended up down for the week with the SPX, albeit but a little bounce on Friday. So let's take a look at it a little closer and see what happened as the week went on.
and notice what kind of a cycle we were in. We have definitely come into a sideways cycle, as we've been talking about. Our 30-day moving average is basically sitting in the middle of our trading zone. And we saw that if we look back on the week, Monday was an up day, Tuesday was an up day, the biggest day of the week. Wednesday, with the Fed announcement, we ended up with that, one might call that a hanging man. And then we saw on Thursday the market sold off like there was no tomorrow. Anticipation of the bank downgrade? Don't know. Something caused it to sell off like that. As we ended up giving back everything we gained the first 3 days, and we changed cycle. We were in an up cycle, and now we're getting lower highs, lower lows. So we are now in a down cycle in a sideways trending market. All right. It will continue to be sideways as long as we remain above this candlestick that we got on June 4th. And we ended up with an inside day on Friday, and it was not very conclusive, nor was it very strong in that it started heading back up, but we did get a little bounce after that horrible, horrible Thursday, if you recall. With that thought in mind, let's take a look at some of the other characteristics of the market that we can draw some conclusions for. Looking at the Dow, we see that it looked very much like the S&P, and we see that it is trading above the 30-day moving average, and the order here is the 50-day, 30-day, 200, not exactly bullish, actually sideways. So Dow moving sideways with the S&P market. NASDAQ, a little different picture here. The 30 is between the 50 and the 200, but this thing seems to move just a little bit further than the Dow or the S&P as we see it coming back toward that 30-day moving average. It did have a bounce on Friday, and we'll see exactly where it's headed. There's our previous low on June 4th. And so at this point, we're thinking in terms of some kind of sideways trend out of the NASDAQ, with a little more volatility than we see in the S&P and the Dow. All right, next let's take a look at the Russell 2000. Again, looked very much like the NASDAQ as it came down, went back up, came back down, bounced off the 30-day moving average. A little more volatility in the Russell than in the S&P and the Dow. So it's following very much like what the NASDAQ looked like. If we look at the volatility index, we saw that we were finally back in our range between 20 and basically around 15. And look at this day on Thursday with that big down in the market. The VIX was up 15.5%. Yeah, a lot of volatility there in the market. The premium showed in the option market that volatility was there. So there were certainly some opportunities that took place during this week. So volatility really shot up, but we're still below that 20 mark as we had a little bounce on Friday. See where we're headed as we go forward. All right, so let's take a look next at some of the ETFs that can tell us about some of the other sectors. Looking at the TLT, which is the ETF for a 20-year Treasury bond, we see that it is in a sideways trend, sitting well above the 30-day moving average and definitely giving us that classic bullish look where the 30 is above the 50, which is above the 200, and the bonds are definitely in breakout mode as they are going sideways, but a long way from where they had been trading during the earlier part of the year. So bonds have certainly given some opportunities here as the market has been moving forward. Actually, as the market had been moving down and sideways. Next, we'll take a look at the financials, which had horrible news Thursday after the market. But they didn't go lower. Big surprise, a little bounce out of the financials, represented by XLF, which is an exchange-traded fund, which basically covers many of the companies in the financial market, and that includes banks. Next, let's take a look at another ETF. We'll take a look at oil, and we see that oil has been in a real downtrend. Hasn't changed that trend, had a bit of a bounce on Friday. At least we're starting to see some relief at the gas stations. As we see, we had a breakout on Wednesday, and it broke down to new lows. And finally, not least, we're going to take a look at gold as one of the exchange traded funds. The ETF is GLD, and we see that gold pulled back rather sharply on Thursday, and really gave us an indication that that may have been coming. And we saw we got a little bounce, less than 50% retracement on that big down day on Thursday. So gold sold off, and obviously was not the safe haven that people headed to on Thursday as the market. Kind of an interesting how it handled that twist. All right, so next let's take a look at the spider and take a look at what kind of volume we had as we got that bounce on Friday. We had pretty good volume on Thursday when it was going down, and pretty good volume on the day before when it was going nowhere. And then we see there we are right there. Friday's volume is low, 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 low. So don't get overly excited about that bounce up. It's not being confirmed by volume. And we'll see next week, or this coming week, exactly what's going to happen. Is the market, are these stocks going to rally again? Or are we going to pull back just a little bit further and continue in that trading range that we've been talking about so often? So with that thought, for those of you that are gold members, we'll be looking at our stocks to watch. We'll be analyzing a little further the SPX, what we expect it to do next week. And we certainly had an interesting week in the market this week with lots of news, lots of information came out, housing numbers, and we saw the Fed coming out. And then, of course, we had the downgrade of the banks, which we'll see how that plays out as time goes on. Seldom do we see a market run without the financials actually participating in it. So, for those of you that are gold members, we'll continue with our list of stocks to watch. We'll be back in just a minute. For the rest of you, for more free videos, go to www.optionsuniversity.com/free gold. And with that thought in mind, this is Butch Sharrock. That's Options University. It's Monday, June 25th, 2012. And thank you for being here.